Well, good morning, friends and fellow traders. It is your friendly doctor of trading here, and we are going to have another fabulous session where we share with you some information, some tools and techniques actually to take you and your trading to the next level. So however you're listening, and however you're coming in from all over the planet, welcome, and we're going to get started right now. So today we're talking about fear and greed. And the title, The Double Jeopardy of Trading. Of course, those of you who have been trading for any length of time know exactly what I mean when I talk about a double jeopardy. For those of you that don't know, fear and greed are two of the most insidious, most difficult things to overcome in terms of emotions. Now, there are other emotions that are difficult to overcome because emotions just can distract us. They take our eyes off of what matters most, and we stop focusing and become very distracted and disrupted as well. So today we're going to talk about what's going on with that, why that is, and begin to look at some of the ways to reduce that as a factor in your trading. So without further ado, we will look at managing emotions and the fact that they're an important element of the trade. Get this going. So oh, by the way, that's my information. If you'd like to get in touch with me, drwoody@wizardchance.com. Okay. Now, humans are emotional beings. We are emotional beings because we're made that way. And emotions are not bad. Even tough negative emotions can be quite helpful in terms of lifting the awareness of what we need to put our attention to and what we need to make changes in. So emotions are, even though they're tough, they're not something that you want to get rid of, even though a lot of the people I've talked to in the past, a lot of early young traders or young in their career, they have said, Doc, let me take away these emotions. I don't need them. Well, yes, you do need them. Because if I were able to, which I'm not, and I fully wouldn't want to, if I were able to, I wouldn't do it anyway, because if you take the bad emotions, or not bad, but the negative emotions away, you also will have to take away the positive, the love emotions, the joy, the motivation, the desire. Those are instrumental to us reflecting our true nature and reaching our goals. So even if you could get rid of emotions, you wouldn't want to. And we are emotional beings. Now, as emotional beings, there are certain things that we deal with. But one of the things that I want you to know is that you can train yourself to manage your internal state. We call that self-regulation. And your self-regulatory capacities are connected to your ability to not only manage your state, but to use it to achieve your goals. And it's a matter of being trained and using that training to get you to a space of where you want to be. Now, professional athletes, military, special agents, all these guys and gals have been trained in ways to manage their internal state because they're in a lot of very precarious situations that are very risky, and they have to have presence of mind. But so do you. So do you. When you're trading, that's a really challenging endeavor because we need a plan, and we need a good plan with a good strategy. But if you can't execute that plan, if you are falling prey to errant emotions like fear and greed, you're going to, when you get to that fork in the road, and rather than go to the right and bring your A game to the platform, which is your best that you have to offer, where you are focusing on what matters most, you are aligned in body, mind, and emotions, going in the same direction and for the same goals, then if you can't do that, then you're going to go to the left, and you're going to find yourself going over the cliff, crashing and burning, the metaphorical cliff. So learn to harness your emotion and make feelings your ally rather than your foe, because even the negative ones are gateways to finding out more about yourself. And remember, at least one of my definitions of trading is a journey in self-discovery. Trading is a journey in self-discovery. You're going to find out so much about who you are and how you operate. You're going to find out whether or not you have good, solid self-discipline or whether it's spotty. But whether it's good or spotty, you need to understand and know how to manage your internal state. So, as I said earlier, it's really about training. And when you train your brain, and we'll talk about ways to do that in a moment, you're going to begin to develop a habit to focus on the aim of what trading is about. And the aim of self-discipline, the aim of your trading psychology, which is rule-based trading while managing emotions. Let me repeat that. Rule-based trading. It means that you never want to enter a trade without your rules in hand and putting those rules to work for you. If you've got a rule, you've got to use it. Otherwise, it's not a rule. It's just something that you have that's laying around like an old rusty tool that you never need or use. But you need and you also must use these rules. Rule-based trading can keep you in the green even in the tough times. Doesn't mean you're going to win and gain profit all the time. And you're not going to. There's no way. But you can learn, and you can learn so much from those losses. But you've got to keep the losses small. And to do that, you've got to keep your eyes on the prize. Now, a lot of you, when I say that, the first thing that comes to your mind is what? Profit, right? That is not what you want to focus on. The outcome and the result of the consequence of your actions is not where you want to put your attention. Your attention must go to the process. In this context, the prize is not the profit. The prize is the process. And when you elevate your process to a standard of excellence, then you are going to be putting yourself in a position to have the prize. Because the prize is what leads you to the profit. The prize is not the profit. The prize leads you to the profit. Right? Who is that from? That's Kareem. Okay, hello, how are you? Now, when you are using your rules and you're doing things in a way that keep your mind and brain focused on what matters most, when you continue to repeat that over and over, you are what's called systematic desensitization. You are desensitizing yourself to the elements that cause you fear and greed. Now, let's say that you enter into a trade and you're going long. Say it's a fairly straightforward trade. You got a pair that maybe it's the euro dollar. So, and you're going long. And as soon as you enter the trade, the price action starts to drop out of your direction and going towards your stop. What happens? A lot of you become anxious, start sweating bullets, your heart's palpitating, it's about to beat out of your chest, and you become very afraid. Look at what you're afraid of. You're afraid of a loss. And to you, that loss means it's a big deal. Now, I'm not minimizing loss to the extent that it's not important. But it's the reason that you want to allow the markets to prove your strategy right or wrong is because you want data. You want intelligence. You want to know what happens when you use this particular strategy in this particular way. You cannot get that if you panic and do what so many people do in that instance. You move your stop. You you exit the trade prematurely. You don't give the trade the opportunity to unwind. It's really important to allow the market to prove your strategy is wrong or right and to amass more data. A good friend of mine and my business partner, actually, he talks about the fact that when I first met him years and years ago, he was running his own uh, academy. And what happened was he began to use the information I was providing to he and his team at the time about the importance of documentation. And documentation is data. And data is intelligence. Data is power. The more data that you have, the more access you have to what is going to either help you or hurt you. That knowledge is golden. It's a treasure. So that the amassing of that knowledge is going to always be in your favor, not against you. Now, years later, he has a bank of information about playing, and he trades futures, but it doesn't matter. Even though we're talking about Forex, it doesn't matter what you choose as the asset of the asset class. What matters is how you execute, how you strategize, how you use the information and put it in a form that's going to support you. And you don't want to be mired in fear and greed or anger or any other type of disruptive emotion, even if you are really euphoric. Euphoria can work a job on your ability to focus as well. So put yourself in a fairly neutral position. Execute your plan to the T. Keep your commitment to all your rules, and in that way you will amass more information, and you will desensitize yourself to the many things that can throw you off if you pay attention to them, like the price as you're moving towards your stop, or maybe you're new to trading and you see the price action jump up, and your heart starts to jump out of your chest. You think, "Oh my God, this is an opportunity. I got to jump on this." No, it's not. Once that has happened, the train has already left the station, guys. The train has already left the station. You don't want to chase a train. And there are a number of things that can go on that you want to always avoid. There's only a couple of them. One is to avoid moving stops, avoid chasing trades, avoid doubling down on losers, and there's more, and we'll talk about them. But I just want to really emphasize the fact that emotions can be mind focusing, like the emotions of desire, the emotions of and one part of desire could be the desire to make sure that you are doing what is important for you to do, keeping your mind focused on what matters most, and bringing your A game to the platform, okay? Bringing your A game to the platform, keeping it there. Those are the things that matter most. So, in keeping your focus on the prize, and it's not about the home run, it's not about the ball, it's certainly not about the big profit or any outcome, result, or consequence. Remember, we said a moment ago, the prize is your process. Now, what I'm sure you hear is a formula that illustrates how you stay in the mode of skill building. And believe me, you want to always trade in a skill building mindset. Everything that you do, everything that you read, everything that you process, everything that you digest as information, you want to use it to expand and deepen and sharpen your skill building. Because for the obvious reason that the more you're able to skill build, the more skills that you have, the more that you're going to do what's in your best interest, keep your highest and best trader trading in your highest and best interest. And eventually you will become a consistently successful trader. with that mode of thinking, with that mode of operation. So let's talk about skill for a moment, what that means. So we'll call that the prize. So first, the small s and the big K stands for specialized knowledge. Specialized knowledge because trading involves knowledge about markets, knowledge about central banks with regard to Forex, knowledge about world events, knowledge about things that are going to affect the economy of a country. And they have a lot of economic reports and things that affect the price action in terms of pairs. So that information is special and is specialized. You want to learn as much about that information and how that information will begin to impact upon the price action and the trading process. So if you take that specialized knowledge and then you apply it to 4 variables. The first is protocol. What's a protocol? A protocol is a series of sequentially ordered steps towards an aim or a goal. Series of sequentially ordered steps towards an aim or a goal. Now, these are the strategies that you employ that have certain types of entries. Bracket orders involves a protocol, the set and forget it type of trading, or if you trade certain pairs, or if you trade the Japanese yen, whatever you're trading, the strategy that you use is is a series of protocols, a series of steps that are designed to get you to where you want to go with that trade. The second variable, ER, refers to effective routine. Now, what is a routine and what is an effective routine? The reason a routine is anything that you establish that's going to support you doing and using your protocol as well. A routine could be looking at the broad markets before you even start. It could be getting your mind and body ready in the morning by meditating and going and working out, things, getting your exercises, getting your mind ready to go through the mental gymnastics that it takes in order to digest information and then use it. So those are very effective routines because they help and support your ability to execute the protocol and the strategies of any particular strategy that you might be using. It might be using your averages, 200-day average, crossovers and things like that, Bollinger Bands, whatever you happen to use in your cadre of tools and techniques, you want to have them in a form that they can be put with your protocols and your effective routines. Now, once you've got your effective routines working for you, always want to establish your feedback loop. I'm sorry. So what is your feedback loop? Your feedback loop is the results that you get from what you do. Whether you're doing well, whether you're exhibiting self-discipline or not, your feedback will give you the information that lets you know if you're on target. And of course, you always want to be on target and on task and on top of what's important. Now, as we look at that, we want to always pay attention to what comes in the form of our outcomes and results, always. Now, even though that's not where you want to put your attention, you do want to use it once it has been established. In other words, once you get an outcome, study it. Know what went into it. Know why you lost. And as long as you're having small losses, that's okay. Small losses are okay. You just don't want to get into a place where you are not managing your risk well and you're allowing what could have been a small loss if you had kept your stop in the place where it was, has turned into a huge loss because you moved it. You mismanaged your. Oh, I'm talking about that now. Okay, I'm talking about the FL is feedback loop. H is habituation. We'll talk about H in a moment. I'm talking about the power of feedback. The feedback loop lets you know if you're on target and on top of what's going on and doing things in a way that are getting you the results because your process is what you are focusing on. And you must pay attention to get feedback and use feedback. The last is H. H stands for habits. And forming a habit is what you want to do. But we usually form habits in ways that are maladaptive. They're bad habits. And as soon as you get a bad habit, it takes an extra amount of effort and time to rectify it. So my suggestion to all of you guys is don't allow yourself to begin to form bad habits. Stick to having a strategy that has been vetted, hopefully by you. So you determine that it works because you have sim traded, you paper traded, demo traded, whatever term you want to use for trading without live money. And by the way, that's one of the best things that you guys can do to practice. You know, that's your rehearsal, and you can get a lot of information with that. In fact, let me just digress for a moment and talk about what some of my colleagues used to say, and some of them still do, that sim trading is not important and is a waste of time. They say that because they say that you said you want to have skin in the game. Well, when you put your pride on the line, that's skin. It doesn't have to be money, but you always want to execute as though you were playing with live money, you know, and put on what you'd actually do a live trade with. Don't put on $1 million if you don't trade with $1 million. That is not in keeping with what is going to be scenarios that create a strong sense uh, of, of focus and a strong sense of understanding where you stand with regard to managing your internal state, right? So that feedback loop is very important, and the habit is very important. So you start with specialized knowledge, apply it to protocols, effective routines, feedback loop, and it becomes a loop because once you do something, get feedback on whether or not you're close or off, and you begin to make adjustments. That's a loop. And then the form of habits that you're creating. All of this equals skill building. And remember, what I said a little while ago, you always want to be in a skill building position, always. And as you learn and master this formula, you will embody the consistency that's going to manifest the prize. The more that you do things well, the more things work for you in very good fashion. The more that, the more lucky you become, actually. People talk about luck. Luck, you don't want to play on luck. But luck seems to come to those who do the things in ways that put them in a position to to get good results. Success is where preparation meets opportunity. And when you hone your skills and at the same time using the ways that I'm sharing with you today that are designed to help you maintain a focus on what matters most, maintain a sense of alignment in body, mind, and emotions so that you decrease the level of internal conflict, which often happens, and you are moving in the same direction without this argument, this internal argument about I should have done that, I should have done this. And you are focusing with a laser precision on what matters most. That's what we want to always do as we move back and forth in terms of our trading process. Now, you're always going to have problems, issues, setbacks, and obstacles and barriers that get in the way of the results. But these things that you sometimes get, bent out of shape about, they're all just challenges, guys. They're just challenges. And as such, we want to keep a perspective on them that is very important. That perspective is that you can either use them to learn and grow and strengthen and skill build by confronting situations, by maintaining a focus on what matters most, by making sure that you're aligned and in the now, not perseverating about what if this happens, what if that happens, or ruminating about things that have happened already, because you can't do anything about either one of those. The what if is in the future, the what now is in the past. Let those things be. And if you must deal with them from the standpoint of learning from them. Because when you have a loss, people want to say, I shouldn't have lost. Well, yes, you should have lost because you did exactly what you needed to crash and burn. You maybe moved a stop, you violated your rules, or you didn't follow your plan, and it came back to bite you. Well, once you have made the mistake, learn as much from it. First of all, accept it. Don't go into this I should have stuff. Learn from that, accept it, learn from it, and guess what? Once you've learned as much as you can from it, got all that, you've mastered data from that particular issue or mistake, move on. So accept, learn from it, move on. But a lot of folks don't do that. They end up remaining in the comfort zone. The comfort zone has nothing for you that is strengthening, that is supported. When should we accept trading is not for? Oh, a great question. If you can't manage your internal state, if you're finding that you are continuing to do those things that you have committed to not do, then because trading is not for everybody. And if you can't establish and therefore execute without or with self-discipline, if you can't do that, you're going to have problems, big problems. So I would say anytime that you are consistently doing what's not in your best interest and losing huge sums of money, huge percentages of your capital, that's going to break you. So, you've got to be able to read the tea leaves, guys. If it's not working for you, it's not working for you. However, now that I've said that, let me also say this, that there are ways, and being a psychologist and a coach that helps people to change their internal narrative, to change their underlying beliefs about who they are. Because a lot of folks have beliefs that they're not good enough, they're not smart enough, that they don't deserve to win. So they self-sabotage. But that doesn't, you don't have to do that. There are ways that you can begin to reduce, first of all, the intensity of doing those things. And secondly, the frequency. And thirdly, once you do that, you're on your way to increasing the desensitization that we talked about, and you can begin to do things in a way that will eventually bring you to consistent profitability. But it takes a real effort, it takes commitment, and it takes the willingness to do what's in your best interest. So don't remain in the comfort zone. In fact, what I've often told my clients and the people I work with, my coaching clients and whatnot, I share with them that When you get out of the comfort zone, stay there and be uncomfortable in the service of your highest and best goal. Be uncomfortable in the service of your highest and best goal, because your if your comfort zone is small and you get knocked out, the reason it stays small is that you tend to scramble back in it. Stay outside and be uncomfortable. Become okay with being uncomfortable. And it's like concentric circles moving out. Your zone of comfort will begin to expand. You'll be able to tolerate things that before you couldn't, like tolerating watching the price action move towards your stop. If you can tolerate that, then you're going to go a long way towards remaining in a trade, allowing the marks to prove you wrong, all right, and to get more data about that particular strategy. Okay, you're vetting that strategy. Now, trading also means you're pushing your internal boundaries, because there'll be times when it's in your best interest to take a trade based upon the strategy. And in fact, that's your job. It's like, okay, the conditions are right, go for it. And if you drag your feet and don't get on a train and the train leaves, then of course you got to let that go. But learn how to take the trades that are part of your strategy and take them quickly. And you can put those trades in brackets. You can do a set and forget. You don't have to sit there and manage a trade. In fact, it's one of the best ways to do it for those of you who are brand new. But part of the point is that you want to instill a commitment to excellence. Excellence is just following through with your plan to a T, keeping all of your rules, following all those rules, and keeping all of your commitments and promises to yourself. Right? Now, when you trade, it's a way to look at that as you're swimming in shark-infested waters. And the reason being is that trading is psychological warfare. Right? Now, how hard is trading? As hard as it is as your emotions disrupt. Because the execution, the pure execution of strategies can be really simple. For instance, if you're a scalp trader, the executing those small trades, which can really bring you good, consistent profits, is fairly cut and dry. And other ways of executing the strategies. But that's not the hard part. The hard part is dealing with the fact that money is a trigger for us. Money is a trigger because power and influence are direct derivatives of capital, right? And so we have been inundated by all of these messages in the ionosphere and the internet about you've got to have a certain amount of money, and that money is everything, and that you're only successful if you have money. Well, that's not true. So you have to put money in the perspective that it really is. It's only a medium of exchange. It is not the end all. In fact, all it can do for you is to get you the things that you want. You can't eat money. You can't drink money. And if you wear it, you're going to have problems. So keep money in the perspective of what the value is only what we all agree that it has. A dollar has no intrinsic value, it's just a piece of paper. I don't care if it has $1 on it, $10,000, whatever. So don't be misled by money. Let money be the exchange product. Get more of it by having a strategy that is built on excellence of follow through and excellence of your process. And if you do, you can avoid the thoughts about yourself that can be so limiting, so debilitating. And I know those of you out there listening to me have done this. You have called yourself names, you call yourself idiot, you stupid jerk, you don't know what to do. I saw a man actually beat himself upside the head because he was so angry at the fact that he couldn't follow through. And he kept doing things that caused him to lose. Well, That's getting caught up in the mire of things that don't matter. And when you're in the trade, profit doesn't matter. I know it sounds crazy. It sounds counterintuitive, but the profit, when you're focused on profit, it bifurcates your attention. It takes away from valuable attention that you need to focus on when you're trading. And it has nothing to offer you. The process has everything to offer you. The only time that the outcome becomes relevant is after you've gotten it. And then you can deconstruct it. You can learn from it. Right? So don't get caught up in this thing where if you've got money, you think that you're hot stuff, and if you don't have it, you think that you're ugly or stupid. And leave that, let that go. It is not serving you. Right? Now, with risk and the threat of loss, the stakes come. That's when the stakes become very high. You've got to manage your risk, guys. Manage it by understanding what risk is, understanding what is the best percentage of risk to your size. And in fact, usually there's a rule of thumb, a 1% loss percentage out of each trade is what you want to have as 2% is fine, but if you go up to 5%, that's getting pretty big. You don't want to do that. But here's the point with the emotions and keeping your risk in a tolerable level. You want to have the risk at a level that you can tolerate. If you do, it'll be much easier for you to follow through and do what's in your best interest. Because when you trade, every weakness, every blemish, every character flaw in your personality is going to be challenged, called out, and tested. That's why I said earlier that trading is an exercise in self-discovery. Sam Seiden says, as well, one of my old colleagues, great guy. Sam says that trading is the transfer of money from those who know what they're doing to those that can't, that don't know what they're doing. But I put one more element in that, and I say that trading is a transfer of money from those who don't know what they're doing and can't manage their emotions into the pockets of those who know what they're doing and can manage their emotions. All right, very important. Remember that, guys. So trading is a 95%, 80%, 70%, whatever percentage you want to put on that mental game. It's really about what you think and how you use your intelligence. It's not about doing so much as thinking and using the aspects of the mental game. Now, but trading success means mental and emotional tools. If you don't have these mental and emotional tools, it's like driving a car with no steering wheel. You're going to crash and burn. Right? So you want to build a blueprint for your success, and that blueprint is caught in how you approach it, first of all, how you approach it. Oh, meditation is fantastic for trading and understanding who you are and what your personal challenges are is going to take you a long way. Manage your emotions. All right. So meditation is a big one. Using other tools, and I'll mention one in a moment. But anything that's going to strengthen your mind and train your brain, because mind and brain are two different things. Anything that's going to do that is going to be helpful for your trading. Certainly meditation is one of them, right? And training, doing things in a way that rehearses and keeps you focused on what matters most, then that's going to train your brain, because the brain is just an organ, guys, and it's always looking and tracking what we do. And when you have an experience that keeps coming up, whether it's positive or negative, the brain is going to process that, and it's going to make it a schema first and then a core belief. And this all happens when we're little. So these beliefs I talked about before, that I'm not good enough, I'm not smart enough, stuff like that, those come from experiences that you had as a tiny child, and and those experiences were processed by your brain, and your brain either created a heuristic for it in terms of a traditional way of approaching it, or it became a default pattern of thinking, feeling, and doing. This default pattern can be about anything. And because trading, again, involves money, something that we're all inundated, is supposed to be this all-important thing, it creates a perspective, a way that you look at things, a way that you contextualize things. So what you want to do is, as it says here, keep your eyes on the ball. Keep your eyes on the prize. What is the process? Keep your eyes on how you are executing and how well you're maintaining your execution, right? And systematic desensitization is something that's very important. Now, I don't have much time left. That's why I passed on that last slide, because I want to talk for a few minutes that we have left on the creation of a sensory-rich vision of trading success. This is a great way to use the power of your brain by creating a vision of what you're going to be when your purpose for trading, and you want to have a purpose for trading, which is your compelling reason. That's where you take what matters most in your life, which is like family and friends and your community and things that you love about your community. You put them in the service of your highest and best goals in trading. This is how that works. When let's say you are like me, your granddad or your dad or mom, where your family and your children mean a lot to you. Now, you can invoke those things that mean most to you, and keep yourself fairly narrow in terms of making sure that you are following your plan and following your rules. So that's using your purpose. Another way that the purpose is used is that it is connected to your passion, because it is something that means it matters most to you. This involves thinking about things in ways that you're not going to jeopardize your family if you put in context that you allow yourself to make big losses. You're going to be much more involved in the decisions that are going to be supported in having your family safe, right? Now, that's all about the purpose. And once you have that purpose in mind and you've discovered it, the purpose is something that you discover. You can make a purpose up, but it's not going to be as powerful as one that is actually part of who you are in your makeup, right? Now, this sensory-rich vision is powerful because it lights up your whole brain with desire. Your prefrontal cortex, your occipital lobe, your parietal lobe, all of these parts of your brain begin to fire on the same goal. And the goal is that you are using the process of doing what matters most. You are keeping your A game at the platform. You are focused, and you are thinking in ways that are supported. How to avoid excessive trading? Well, that's part of the greed. Remember, we're talking about fear and greed. And you can put that in your sensory vision as well and see yourself adhering to the limits that you set, all right? So that's real important. And when you've got this picture, the brain can't tell the difference between something that is real, that you experience as part of your physical environment, and something that you imagine. The brain deals with both of them in the same way, and it can't tell the difference. So that when you put this sensory-rich vision of yourself going through a trading process that is full of planning and full of rules that you are keeping and commitments that you are keeping. As you do that and you're rehearsing that and practicing that, you are training your brain to value that, and that slowly and incrementally becomes how you trade, right? So the vision can act like a hot branding iron, and it can be really powerful. And that's where it would have to end today, because that's our 45 minutes. I'd love to be able to talk with you more, but of course, come by and see me, call me, or you can use my email address as well. And we'll put that down here. Oh my God, I just messed that up. Let me go back a little bit. I did it too much. There we go. So that's my email. And I am a trading psychologist. I'm licensed in California, and I'm here to help. So take care. It was a pleasure to be with you. I look forward to coming back. Thanks to all the hosts of FX Street that allow me to come in and share some information with you. So be safe, be well, my friends, and we'll see you next time. Bye-bye. Rashan, I hope that what I said about avoiding excessive trading is helpful for you. Yeah, I'm going to stay here now for another couple of minutes. If anybody has questions they'd like answered, I'll stay just for another couple, because we've got to the channel. So I'll just stay for a couple more moments. Doesn't look like anybody's coming forward. Okay, well, again, thank you guys. It's always a pleasure. And I have borderline personality disorder. Is trading a bad idea for me? Well, let's put it this way. It's going to be problematic, because you're easily triggered, and you know what I mean by that, being suffering with that. And that it's usually brought on by things that happen to us when we're children. It's abandonment, and things that about certain abuses that go with child development. So when we grow up, we are very afraid of what can happen to us. So it's something that you want to get some help with, and if you want, call, email me, and I'll certainly be there to provide you some support around it. All right, so I got to run, guys. Thank you so much. It's been a deep pleasure, and I look forward to seeing you again soon. Bye-bye.